Disney, DIS, Get Walt Disney Company report stock soared on Wednesday after the popular entertainment company posted first quarter earnings that exceeded all analyst expectations. For the fiscal quarter ending on January 1, Disney reported earnings of adjusted 1.06 cents per share on revenues of $21.82 billion. A survey of Refinitiv analysts, in turn, were expecting 63 cents on $20.91 billion. Net income from continuing operations hit a record $1.15 billion. Shares, in turn, surged by more than 8% in after-hours trading and are now at $148. A large part of Disney's success has to do with Disney Plus subscriptions on the company's streaming platform, which are a reported 129.8 million compared to an expected 125.75 million. Total subscriptions, which also include services like ESPN Plus and Hulu, are at 196.4 million, a sharp turnaround from November numbers that showed declining subscriptions, while average revenue per user, ARPU, was at $5.80 a month a year ago. It is at $6.68 per month now. As easing COVID-19 restrictions brought more people into its parks, revenue from Disney's parks, experiences, and consumer products division brought in $7.2 billion a year ago. That number was only at $3.6 billion. We've had a very strong start to the fiscal year, with a significant rise in earnings per share, record revenue, and operating income at our domestic parks and resorts, the launch of a new franchise with Encanto, Disney CEO Bob Chapek said in a statement. There was also a significant increase in total subscriptions across our streaming portfolio to 196.4 million, including 11.8 million Disney Plus subscribers added in the first quarter. As 2021 drew to a close, Disney closed all of its stores in Canada, as well as a significant number in the U.S. Consumer products revenue, in turn, fell by 9% to $1.5 billion, but in general the company reported a very strong first quarter. We have a portfolio of distribution platforms, including powerful and growing streaming services, Chapek said in the earnings call. We have diverse revenue streams that span business models and industries, which all are interconnected to create entertainment's most powerful synergy machine. Chapek named the ability to pivot to uncertain times and quick changes amid the pandemic as the reason for this quarter's success. Future plans include continuing to try to grow its subscriber base amid competition from companies like Netflix, NFLX, Get Netflix Incorporated report, and HBO. We do not subscribe to the belief that theatrical distribution is the only way to build a Disney franchise, Chapek said. This quarter, audiences proved us right as Encanto became a phenomenon within days of its arrival on Disney Plus, after families' continued reluctance to return to theaters resulted in a muted theatrical performance.